Remember the 70s, bell bottoms and disco? If you do, you no doubt saw this moment in history. Now, on September 20th, 1973, in front of the largest TV audience for a tennis match of all time, Billie Jean King beat Bobby Riggs in the Battle of the Sexes. So, more than 40 years later, after that famous leap over the net, in a different court, how do women fare in investing's Battle of the Sexes? Now, if the success of women in investing had to do with the number of advisors, money managers, and investors, the results would be pretty abysmal. However, when digging into the numbers, women often beat the men at the investing game. Author Meredith Jones explores this in her new book, Women on the Street. Now, one thing she points out is that professional money managers are more likely to do it my way than men, and less likely to follow the herd. We are also able to say, oops, I made a mistake, sooner than men, and exit bad positions. Brain science also comes into play. There's a portion of our brain called the amygdala, which controls stress. Now, women internalize stress, and men respond externally. Now, this may be the reason, as shown in a recent study, that men traded 45% more than women, prompting them to earn 1.4% less. Now, ironically, women are often criticized for being too emotional. However, as a group, we ladies understand there's such a thing as normal market noise, and we are therefore less likely to sell at the bottom when the inevitable corrections come. Now, Meredith also brings up two other important points that I often see with my own clients. Now, studies show that one disadvantage that men have is that they are overconfident. However, women often have the opposite problem, often due to lack of education and experience. Well, guess what? I have a master's degree in business, and I wasn't taught anything about personal investing in business school. I learned it on my own. So did the guys. So where do you start? An easy-to-read investing primer is She Retired Happily Ever After, written by yours truly. But no matter where you begin, I believe it's vitally important for women to learn about money and investing. There's nothing sadder I see in my business than an 85-year-old widow who is totally lost and unprepared to manage finances when her husband passes away. Now, a second important factor is that women often strive to avoid losses. Now, all growth investments, stocks, bonds, precious metals, and real estate all have ups and downs. But I often come across young women who want all of their money invested in bank CDs. They have no tolerance for risk. The problem is that holding low-interest CDs over a long period of time means that you lose money slowly due to the impact of inflation and taxes. I believe that age and goals are better investment criteria for portfolio selection rather than one based solely on gender. In general, women need to invest more aggressively when they're younger, and men need to step on the brakes as they age. Now, in my business, I search for investments that protect when the market goes down and participate when the market goes up. As a result of the Battle of the Sexes tennis match, women tennis players achieved pay equity with the men. I would love to see the same thing happen with women in investing. Now, if you're looking for a coach to help you flex your investing muscles, I'd love to help. Give our office a call at 480-503-0050 to schedule an appointment.
This has been a Loki production.